Jim, let's talk about your long-term analysis in the euro dollar. In global market perspective, you turned bearish back in February 2018. Where was the euro dollar at that time?
Dana, at that point, the euro was reaching 3 years extremes, trading over 125. So it rallied a long way. And at the same time, bullish sentiment after such a rally was at extremes as well. So everyone thought the euro was going to continue to gain relative to the US dollar. But we had good reason to believe otherwise. So sometimes those sentiment indicators that we follow, those are contrary indicators. It gave us a warning that we should be looking the other way from the crowd, that we should depart from the crowd. But we really have to rely on our Elliott Wave analysis as the final arbiter. So let's go to the chart and take a look at what we saw then. So on this weekly chart, going back about it from the low that registered about a year prior, we thought we could count a 5-wave advance. So we had a 1, put a 2, a 3, and then we saw a consolidation over a period of time for a 4, and then a 5. And that was a signal that a high should be nearby, if not already in place. And in addition to the 5-wave advance, the triangle wave 4 was also a sign that that last leg up was terminal, because thrusts from triangles are ending movements, C waves, or in this case, a 5th wave. So it added to the evidence that a top was due and that the euro should turn lower. And at a minimum, and we said at the time, at a minimum, we were expecting a return to the lower end of that triangle, which was about 115.50. So we were looking for a reversal of some 10 figures from the high, and that's a substantial move in euro dollar.
Was the turn in trend obvious to you right away?
It was, Dana. Now, we called for the turn at the end of February, so in the February issue of GMP. But in the March issue of GMP, which was just published a month later, we confirmed that the top was in place and that that move down to 115.50 was already underway. And it was high confidence at the time. And as you can see on the chart, Dana, the decline lasted more than 6 months and easily exceeded our downside target, with the market falling into mid-August.
Okay, Jim, so looking ahead, where do prices go from here?
Well, Dana, we have a very firm opinion at this point. You remember previously I talked about that contracting triangle and the thrust higher into that high at 125.55. We've seen the inverse of that pattern, a bearish triangle over the last 6 months. So we're firmly bearish, thinking the euro dollar is going to continue to weaken, which hasn't been the general view of most traders.
Thanks so much, Jim.
Well, thank you, Dana.